Analyst. I'm excited to develop one another video. This time the topic is position sizing, stop losses. I'm sure if you're searching for this video, you must be interested in trading, especially trading for living. Because an occasional trader or seasonal trader may not understand the value of position sizing. But if you are so consistent in long run, and if you wanted to be consistent and successful in long run, you should really understand what sort of risk involved in stock trading and how that risk can be handled effectively using position sizing and stop losses. In short, position sizing is all about understanding and finding the right quantity which can enable you to swim throughout the trading career. Number two is stop losses, because what is your risk tolerance? How effectively you are financially protected. How to ensure that you are exiting trades at the logical grounds, not at just illogical or financial grounds. So this video is going to talk about these things, and to calculate the position sizing and the right stop losses and the strike ratios and various things, we have a very simple calculator prepared through Excel. So through this video we are just giving it for people, so you can find the links at the comment section as well. So now you can actually understand how am I using all these things. Okay, first and foremost, why risk management? Remember one thing, any analyst for that matter is not always right. There is no such analytical system which helps you to predict the market for sure. Even if your system is right by 60 times, it is more than enough for you to make money happily in the market. That the moment I say this statement, people say, yes, Murugan, it is enough. But let me tell you one thing, how you handle your 40 failures will lead you to be happy at 60 successful things. So people are excited, although they understand the term 60 success is enough when it comes to 100, but how emotionally people react and what sort of quantity they play around those failure trades, actually the reason why people make or lose money. Because you don't believe me, you don't have to be always right to make money, but still emotionally we really wanted to be right every time. That's where we contradict ourselves. Let me tell you one thing, with just 40% right, there are people who make money. But because they are fantastic in terms of how they handle their risk and how they run their profits and how they limit their stop losses. So every trading systems are unique in their own way. Some trading systems are right 80 times, often generates calls, but do carries wider, the risk reward. So I'm going to talk about that in detail. But anyway, number two, consistency is a key, because stock trading is not one time right or one time wrong. It's not make or lose. It's not do or die. You should know how to be in the game for over a period of time. So sometime you're right, sometime you're wrong. Just do repeatedly over a period of time, and then you figure out that in long run, if the risk is risk reward is in your favor, then probably you end up making money. So how it has to be, because first success, second time excitement, third time you do a lot of punch, and third time it goes wrong and you get excited, a panic, nervous, and then next trade you don't trade, then it goes to the target, the old stories. But let me tell you one thing, your position sizing and a proper system in place can help you to be consistent. So how to do that? That's why risk management. Predictable outcome. See, I'll tell you one thing, the stock price behavior is not that predictable. Sometimes it goes up, sometimes it goes wrong. 50% is a very normal chance. But if you're right by 55 times, you are doing exceptionally great. Then how can it be predictable every time? Because if you know your plan A and plan B, even if a plan B triggers, you are well prepared that this is a kind of loss I can actually have. Every trade you do can be right or wrong. But remember one thing, the outcome should be under your comfort. So this video talks about risk management. I'm sure you will find this video very useful, okay, and you really find a lot of calculations which we're going to talk, and by which you understand how to plan your trades effectively. But you really need a lot of patience to see through the complete video. There are a lot of myths which I really want to break before I take it forward. A lot of people, especially a lot of traders, especially the novice traders, do ask this question to me, Murugan, the share price really matters, Murugan, because if you give me recommendations like 100 rupees, 200 rupees, 300 rupees share price, I feel more comfortable because I can play more number of quantities. Okay, now just in case if I give you a recommendation which is around 8,000 rupees, 12,000 rupees, 15,000 rupees, 5,000 rupees, 3,000 rupees, stock prices, people say, Murugan, don't give me the price range of 2,000, 3,000 rupees because I hardly find a good quantity. Let me tell you one thing, the share price doesn't matter. Either it is 200 or 500 or 1,000 or 10,000 or 15,000 lakh, it doesn't matter. Because it is not about investments, it is all about trading. Trading is all about risk management, it is not about trading risk. Okay, Murugan, still I don't understand it. Remember, it is not the share price you are buying it. You are actually buying it for a value. So, and it is when you compare things, you should compare on the relative scale, not on the absolute scale. So this will be given better with a few more calculations through the next sheet. I'll take you through. Number two, a lot of people think traders really need a lot of capital. See, traders don't need a capital. Don't need an investment, but he need a capital, but it is a less capital is good to start with so that you are emotionally stable. And if you prove yourself at the limited capital ground, then probably you can scale up your business. Just because you got a lot of money doesn't mean you start trading with a lot of money, because you may not be good in handling your emotions with huge capital. And sure short call, because whenever we trade, before we punch the order button, I'm sure we are convictionally believing that the price tends to behave. Otherwise, we might have not triggered it. But remember one thing, there is no sure shot. There is no sure shot because every other trade can actually be right or even wrong. So understand and start living with that. Okay, now steps to find the right position sizing. Okay, here is the objective of the video. The risk capital assessment. Okay, now I give you a simple 4 steps. Okay, I'm sure you as a trader will find it very useful. Let's say you got 10,000 rupees, just a 10,000 rupees. Okay, 10,000 rupees, I'm not considering this as an investment. Okay, now you are bringing 10,000 rupees to the trading terminal. Okay, just by understanding that the total money is actually for the risk exposure. So you may lose even entire 10,000. That is how the trading or any business really works. But doesn't mean you have to lose money. So with that risk appetite, how can I actually make money out of this particular thing? So what should I do? But remember one thing, what is your risk capital? So can you offer 10,000 rupees or 15,000 rupees? Sometimes people say, Murugan, I don't mind losing 10,000 rupees. Remember, you may not mind too much to lose 10,000 rupees, but you may have a serious pinch if you lose 5 lakhs or 10 lakhs. Or there may be guys who say that, Murugan, I don't mind losing even 5 lakh rupees. So first understand what exactly your risk appetite is. What is the total sum you can bring? It is not month on month. It is like one time how much money you can bring onto the table. Number 2, find your risk per trade. Let's say you got 10,000 rupees is your total risk. You cannot actually afford to take entire 10,000 as one particular trade risk. So you should ensure that how many trades you have to do to achieve the favorable risk for you, because in short run you may be right or you may be wrong, so that gives you an excitement or panic. But in long run, then you actually fall in the hands of average. Sometime you're right, sometime you're wrong. The net is your return. So how do I play around? So for that you need to understand the risk and trade risk estimation. So number 3 is position sizing. So this is what I'm precisely doing with an example. Look at this one. Trading capital is 10,000 rupees. So I know that this is the amount you are bringing to the terminal. Number 2, finding risk. How can I find the risk? Let's say like I have a kind of trading system, okay, which really need a good number of sample. Let me tell you one thing, 60-40 success ratio is really good if you got a good sample size. Okay, more and more you play and more things will come up. But sometimes there are systems which are 80 times right and 20 times wrong. 80 times right and 20 times wrong, that's very interesting, excited. But let me tell you one thing, there people may have a wider stop losses for the returns taken. So accordingly you should find it. So how many quantity, how many trades you have to do? In this case I have taken 10,000 rupees should be good enough for me to trade. Okay, now to trade this close to 50 trades. So each and every trade I can afford to take only 200 rupees risk. Okay, now look at this. Your risk appetite is not 10,000 every trade. Your risk appetite is 200 rupees every trade. So that 50 back-to-back failures can keep you in the game even at the 50th trade. And no such trade can be back-to-back wrong by 50 times. In case if it is 50 times right, repeat it once again for next 50 trades. And if you understand that every time it is so wrong, then you got a magical system that because quite inversing that trade can be right. So logically, there is no such trades, back-to-back failures. So you know how to first get the trading capital. Remember that 10,000 rupees should not create emotional problem to you. I'm not talking about financial problem. Sometimes people can afford to take more financial risk, but they are not capable of taking emotional tolerance. So ensure that your 10,000 is fit enough to keep you in the trade, and divided by 50. Okay, divided by 50, that works out to be 200 rupees. Heard of 2% rule? Because a lot of people say don't afford to lose more than 2% of your capital. Accordingly, they blindly buy a stock at 100, keep a stop loss at 98, and they say that it is 2% rule. No, I put a 2% rule here, which is 200 rupees per trade of losing the 200 will still ensure that my total capital is still lost only 2%. It is not losing more in a given particular trade. So point number 2, I hope it is good for you. Number 3 is trading risk. Because every time we provide recommendations, we should also provide something called stop losses, because every trade is equally go and trigger the stop losses. So if it triggers the stop losses, how much risk am I taking here? I'm talking about the stock specific risk. That point number 3 I'm talking is a stock specific risk. Let's say if I buy a stock at 1,000 and if a stop loss works out to be 990, then I afford to lose 10 rupees for this particular stock. Remember one thing, 10 rupees for this particular trade still ensure that my maximum risk ability is only 200 as mentioned in the point 2. So to find the position sizing, that 200 rupees divided by 10, which is point number 2, we have identified something called 200, and point number 3 we have identified something called 10. So your total quantity is only 20 rupees. And I'm sure it is more about visualizing, because you are not seeing much when it comes to the screen. You are just listening. So it is quite natural that you tend to lose your patience. So I request you, nothing wrong, see that maybe for 1.5 minutes before you can actually rewind it and again see that. I have a point, it has been already conveyed, but if it is not reaching you, sorry that maybe it's wrong with me. But don't hesitate to see this video once or twice to understand, especially the last 2-3 minutes. I'll summarize it. In case if you got a trading capital of 10,000 rupees, remember this 10,000 can actually go out of you. To that extent, you should emotionally prepare. Point number 2, even if I'm willing to lose the 10,000, I should ensure that I am in the game for over a period of time. So I should not blindly make or break in one single particular trade. Every trade is equally good to make or lose money. But let's say if my trading system is 60%, so 10,000 rupees should ensure that I am in the game for at least 50 trades. So every trade I can arrive only 200 rupees. That calculation is what posted in the point number 2. Point number 3, I'm actually posting it. 1,000 rupees is the entry level and stop loss is 990. If that is the case, I afford to lose only 10 rupees here. That 10 rupees loss is a loss of that particular trade, not to my business. So I should ensure that 10 rupees, so if I take 20 quantities, still my loss is only 200. That is logically fine, as well as protecting my capital. So how do I actually play around? And why people mess up with respect to stock trading? Because they consider investments and trading as one another same. Let me tell you one thing, investments are very different from trading. Investments works on how much capital or how much durable income you got on a year-on-year basis, month-on-month basis, a lump sum, and it talks about your financial commitments, and it is actually about durations, and most importantly, how consistent in terms of the growth rate is. Okay, now what is the percentage it can grow on year, and how volatile the asset class is. These things we're talking about investments, and equity is one another investments, carries a high volatile and high growth rate and high risk. But let me tell you one thing, we got what we are talking now, it is more about trading. When it comes to traders, it is not written on investments. A lot of people are asking this question, Murugan, I got 10,000 rupees with me. How much return I can expect for the investment I have 10,000? Let me tell you one thing. You got 10,000 rupees with you, and how to find returns for the risk taken, we can actually study that. And that is the reason why we are actually talking here. Okay, now what is risk capital? And your returns are actually based on strike ratio and risk reward and turnover. And how to do all these things is, for that we have a simple calculations. I am sure that calculation probably help you to do it better. And how to do this calculator? We have a simple Excel sheet, and by which we make you people to arrive that. So I hope you can see this video, the Excel, which is actually in front of me. So I have a lot of tables. You see that trade risk, because I'm willing to take a risk of only 100 rupees, because every trade I'm right, I still make only 100 rupees. No, but Murugan, I'm willing to take a risk of 1000 rupees. Okay, now so you type 1000 here. Okay. Okay, now first and foremost, where can I find this particular Excel sheet? And this is meant for you people also to customize and see, try your things work out. So what you people have to do is, it's better you go to EQSIS.com. So I hope, if not, I'm sure the videos, you can see that EQSIS.com. So you just type in EQSIS.com. You will see our homepage and scroll down. Okay, I'm sure you find a lot of analysis and a lot of things. There are a lot of videos around it. But if you scroll down, you see the footer section. You have a lot of widgets here. I'm sure under trading resources, I hope you see that under trading resources, trading risk calculator. So if you click onto this risk calculator, you see this gets downloaded to you. So, and then you just open this particular Excel, and you see this particular Excel opens with risk management tool. Okay, what am I going to do? See, this is not going to help you where to buy, where to sell, and what to buy, what to sell. But this can probably help you to understand how your journey is or will be. Remember, a lot of people don't even understand what they are doing is really profitable or not to them. So this Excel can actually give you a clear idea that your trading system is feasible for you to meet your monthly commitment or not. Okay, let me be realistic about it. So I'm gonna invest some time in terms of explaining this, and I'm sure I'm investing. I'm incorporating certain charges and other thing as well. So I wanted to be as realistic as possible using this. Okay. See, number one, the first one. So I hope now you see my cursor, which is trading risk. Okay, now trading risk is okay now. Let's say I have a capital of 50,000 rupees, or I have a capital of 1 lakh rupees. Murugan, this 1 lakh rupees is only for stock trading, Murugan. Nothing much. I have no other job to do with that 1 lakh rupees. Okay, now this 1 lakh rupees is not going to help you to meet 1 crore financial commitment 10th year. That is investments. This 1 lakh rupees should ensure that you trade with this money more and more and more, is to make more money for you to live monthly or a weekly. Okay, how do I do that? First, understand your trade risk. Here the trade risk is 1000 rupees. Okay, and I'm sure you must be following some set of analysis. Either it can be fundamental or a technical, or following some indicators, or even following methods. Okay, but ensure that you back test it well and see what sort of success ratio it can maintain. Okay, sometimes you see a success ratios are just 30% or 40%. Let's take a moving averages. Okay, these trending indicators, moving averages, success ratios are way below 50%. But still, one good wave can help people to recover most of their losses. Sometimes it makes people to make good money when it comes to trending. Okay, now, so it can be any success ratio. There is no hard and fast rule that success ratio should be 50% or 60%, but depends on person to person. But I'm an active trader and I'm an active analyst. I believe in about 58-55% success ratio. So I place 58% success ratio here. So my history says, my way of doing analysis says about I'm maintaining about 50% success ratio. But every time I buy a stock, let's say if I take 10 rupees of risk, I really want at least 10 rupees of return. That is how my trade plan's been created. See, these things you should have your analysis knowledge. Like every time you get recommendation, you check how much distance is there for the risk and how much distance is there for the returns. That talks about risk to the reward. Let's say if I take minimum 1, okay, now you can actually keep it as 1 here. And your trading cost 0.05%. Let me tell you one thing, including all taxes, government charges and everything, these days it is way below 0.01 or even 0.005. But I just made it as 0.05% as a trading cost. Okay. And let's say now the stock price is 500. And that's okay. Now, how do I know the stock price is 500? Okay, now I'll just take you through how we do analysis. Okay, now go to EQSIS website and you see a lot of analysis. Okay, I recommend you to do analysis which you follow, which you find it really good. Okay, and this is not the complete analysis. I'm just gonna take one particular company. So I just wanted to have some, the top traded stocks. So the top traded stocks are these companies: India Bull Housing Finance, L&T, and all these companies. L&T is a well-known company, am I right? So India Bull Housing Finance is a good company, but L&T got a good delivery volume, and OI change is also good. Let me first open the L&T charts. Okay, now I see that the L&T was, look at this one. The trend of the L&T was actually pretty positive. Okay, the trend of the L&T is pretty positive, especially from 2016. If you see, the chart is pretty positive. So I'm gonna sketch this, extend this line, okay, and just extended it, so just extend it on the right hand side. Okay, so I've extended it. So if you see that it takes the bottom to bottom, it got extended and it finds a support around 1200 level, and that's what precisely taken. So although the overall trend is positive, and I'm sure the recent correction was taking from the month of Feb to this level, and it took a fantastic support, and when it took the support, it formed a hammer sort of pattern. And then the volume is also reasonably good, not much, but reasonably good. When compared to the average volume, I'm sure the volume is good. And especially this is the day where the expiry have taken place, so volume is naturally high when compared to any other day. Okay, that's okay. Keep it all together. Now what I see is now this particular stock now has a good chance for price to go upside. So now I can actually conclude that the price can actually go up. So I still say that the chances for price to go up is actually greater than 50%. See, to come to this conclusion, you have to do a lot of analysis. So just to now focus on position sizing, I'm limiting my analysis here. Okay, now I see the stock may actually go up. So to what extent the price can go up? So I just simply take the maybe the Fibonacci retracements. Okay, now when you see the steady fall from this particular level to this particular level, can actually take the stock a bit upside towards 1270 or 1289. So remember one thing, now the stock is trading at 1235. Okay, the price can go closer to 1289. Okay, 1289 is a 50% retracement, and I'm sure it's quite likely for the price to touch that level. And your stop loss works out to be, but by any chance, if a price goes below 1206 or 1200 level, you should seriously think about back out. Okay, now look at this one. Now I go back to this one. I gonna put my 1 2 okay, 3 6 is the entry level you can consider, and your stop loss works out to be 1200. Okay, now if you do that, okay, now your stop loss should be closer to 1272, so that your 36 rupees of risk is being justified by the expected returns. Okay, now look at this one. If you are someone who trade with 1:1 risk reward ratio, then your minimum target should be 1272. So now again I go back to my analysis, see where is 1272. 1272 works out to be 38.2% Fibonacci retracement. So Fibonacci is no problem with that. So I think it's quite comfortable. The price can go to that level. So if I buy a stock, remember this one. Let me take an Excel again. Okay, now look at this. If I buy a stock at 1236, and if a stop loss works out to be 1200, the target is 1272. The stock per se can give a return of 2.91%. Look, this is not for intraday. Okay. So naturally, this is not for intraday. The stock carries about 2.91%. So the risk per trade is 36 rupees. It's not a very difficult calculation. So these calculations are anyway available in your Excel sheet. So you can download this Excel and see that. But remember on this one, 36 rupees risk I'm taking. In case if I take 36 rupees, how do I know 36 rupees? Because I'm buying a stock at 1236 and I'm willing to hold the position till 1200. But my ability of handling risk is only 1000 rupees. Okay, but each and every quantity can take a risk of 36 rupees. So I'm gonna divide this. No, I'm dividing this total risk divided by this particular guy. So if you divide this particular one, because for every quantity I'm losing 36. So every 10 I lose 360. For every 20 I lose 720. So every 27 I lose close to 1000 rupees. So the quantity I find, this is what called as position sizing. Okay, now people say position sizing matlab what, Murugan? You find the right quantity. Now I managed to find 27 is a quantity which suits my financial constraint of 1000. okay, because I'm not offered to take a risk more than 1,000, and this will ensure that I'm also consistent every trade, because sometimes some trade gives a lot of appeal that you should increase your risk, and a lot of people spoil that. Okay, now they increase the quantity and they decrease the quantity, but let me tell you one thing, to be unbiased, you should be consistent over a period of time. So every trade I find the right quantity for it. So I got 27 quantities here, and every quantity here can make or lose 36. So sometime it works, sometime it doesn't works. Let's say like this, if I do 100 trades, okay, remember to do such 100 trades, it takes some months of time, maybe 2-3 months. Okay, with your risk of with your let's say you do it for 100 trades, 58 trade you worked out to be right, 42 times you're wrong. Okay, how do I arrive this? Because of my experience or because of your trading experience. If you believe that you will be right only by 55 times, just try 55 times here. You still see that you're making money or losing money here. Okay, this calculates all these things because it's a very simple calculation that out of 100 times, 55 times you're making money, 45 times you're wrong. So, every time you're making 36, anytime you're losing 36. So whenever you make, you're actually making 36, but it involves some trading commission. So we have integrated 0.05 on the stock price. So when you calculate this, it works out to be some cost. If you really want to increase the cost component or decrease the cost component, you can actually do, but try to be realistic about it. Okay. And then calculate. See, whatever changes you really want to do, I request you people not to touch this area. Better you touch whatever the yellow shades given to you are the one which you can actually touch. The rest of the things, I'm not protecting it, but anyway, I request you people not to disturb that. Otherwise, freshly download and change and reset this one. Okay. So this particular thing, remember, by doing hundreds of trade, okay, whenever I'm making 1,000 rupees. Whenever I'm losing such amount. But still I end up getting only 8,283 rupees. So remember, is first and foremost question, is 100 trades is possible in a given month or not? Number one, Murugan, how can I do hundreds of trade in a month? Because of course you cannot do hundreds of trade in a month. So even if you do hundreds of trades, hundreds of opportunities in a month, if your system is good enough to give you hundreds of trades in a month, you end up getting only 8,000 rupees out of that. That's why we don't actually charge too much when it comes to recommendations. Remember, cost of trading matters a lot. Okay. Number two, then Murugan, I seriously need slightly more money for me to survive. And it really takes, per month I end up getting only 25 trades, Murugan, 25 trades. Okay, now 20 trades only I can take it, Murugan. So let's say you're gonna go for 20 trades. Okay. And still 1,600 rupees is not enough for me, Murugan. So you should be in the position to take 10,000 rupees risk per trade. So your quantity should be 277. So that you end up making 16,000 per month. But remember, every time you are making 10,000 or every time you're losing 10,000. It's not every back-to-back you make or lose. Sometime when you lose this money in market, you lose your confidence. Sometime when you make money, you get double confidence and double boosted. But try to be realistic. But remember one thing, it is easier to change the number in the Excel sheet from 1,000 to 10,000, but it is not that easy when it comes to real life. So first, your focus is not something this area, how much money you make or how much money you lose. It is about how good you handle your 100 rupees risk, 1,000 rupees risk. But remember one thing, this Excel can help you to understand what you should do in long run to take it actually, to be a successful business. If you don't even understand these calculations, and if you see that, let me buy, if a price goes up, I make money. I know that in a single trade, you're making money. In some trades, you lose money. But you don't even know your destiny, but you're still traveling. Then something wrong. I appreciate your interest and patience, especially it is more about visualization. You managed to see this video for so long period. I'm sure that's the reason why we also give you this Excel at just free away. Again, you can actually go to this particular, there are a lot of things available in various places. You can actually go to, again, I just give you the location, which is EQSIS.com. You see our website, any pages you go, there are a lot of content you can see. If you find it interesting, make use of it. Okay, and if you scroll down, you see the about X's and a lot of things you see, and under which you see a trading resources. There you find a trading risk calculator. Click onto that and you find this particular content. See, now you might have understood that the stock trading is quite different from investments, because investors hardly concern about strike ratio, position sizing. It's more about your financial objectives and how much money you got, and what sort of growth rate and what sort of assets. But this involves more of things. Now I'll take you through one more calculation, how we handle with respect to intraday trading as well. Okay, now when it comes to intraday trading, let's say, every trade I'm willing to take a risk of 1,000, and my risk, see, the worst thing people do is they are inconsistent about trading, because they don't actually keep this 1,000 consistent. First trade they take a risk of 2,000, second trade they take a risk of 3,000, fourth trade they take a risk of 500, sixth trade they don't even do it, seventh trade they take a risk of 10,000, and they think every money have to be recovered this one. Let me tell you one thing, sometimes we get a call that, Murugan, I've lost this much of money, I've believed in you, kindly help me to recover all the money. But let me tell you one thing, it is not one such thing. If I can make you to for sure to recover that money, then a lot of big money can be made out of it. Stock trading is not just having the successful path. Even there are a lot of people understand, there are a lot of failures, but the art is how we learn to be in the game even during the successful as well as the failure times. Okay, now so just be focused here. Now I'll show you about intraday trading. Now I'll tell you how the analysis can be, let's say you are right by only 55 times. Okay, now let's say I'm right by only 40 times. You end up getting result which is so bad. But some trading system, like let's say moving averages and other systems, people say that, Murugan, whenever it gives money, it gives good money. But they don't take good money out of that. What happens is, because it hardly gives money, but if it gives money, it gives good money. So the point is, when it comes to risk reward ratio, even if it is 40% right, you should test your system whether it is capable of giving 2 rounds of return or not. Because whenever you are right, you are actually aiming for, whenever you are losing 36 rupees. But whenever you are wrong, you are losing just 36. But whenever you are right, you are making 72 rupees. So it means your target should be 1308. Now I should actually go and see that my charts. Okay, now when it comes to this one, if this is good enough for the price to go to 13,200, let's say about 618% retracement, and I've seen the moving averages and a lot of things, and if you're so good, see, it is not making money for this particular trade. And after seeing this video, sometimes people see that the price moves up, and a lot of people congratulate. Sometimes people say that the price have moved down. Murugan, this has not happened as you said. I'm not talking about this particular trade. If I'm talking about this particular trade, then the quantity should be always high for us to make money. I'm talking about stock trading as a business, and this trade is one such activity in the business. So it can be right or it can be wrong. But if it is right and if it is capable of giving me 72 or 80 rupees return, but with the risk profile of only 20 or 30 or 40, then even 40% success ratio is good enough for me to make money. So I think a lot of things you can tweak and understand which suits your trading system. So I think you also need a patience through one shot of watching this video. If I expect you to understand it everything in quick, I am unrealistic about it. So take your own time. So some of you people may be already aware of it, may not be putting in practice. So probably this Excel can help you to put in practice. And there are a lot of people we come across, especially in the recent times, because see, and one more thing, we strongly request you people to check out our YouTube channel. So you guys can find our YouTube channel, which is YouTube. I'm sure you kindly subscribe our things and do make notes. So do comment about it. We appreciate, and each and every comment we go through. But at times we respond, but we request you to take some time in terms of writing your comments. That motivates us to actually come up with this. Do write your expectations. If you really want something else, we can actually do it. But don't expect us to be right always. That is something which is unrealistic. We do have a poor success ratio sometime, and we managed to overcome that. Sometime it works, sometime it doesn't work. We never excited for the target achieved or stop loss triggered, but we try to learn, and we are actually closer to the inch towards how to be successful even with failures when it comes to analysis. So that's progress is what taking us all the way upside. So I think here the loading, it's taking a bit more time. So you see the youtube.com/EQSIS.com. So you see there are a lot of videos which you can see. So when you scroll down, you find a lot of videos. We have interesting videos. A lot of people are following our option chains or intraday analysis, trade signals, and in fact, we have made a lot of improvements. The next particular video, we're going to talk about option chain where there are hundreds of stocks. But how do I find the right stock? And in fact, for intraday analysis, we have this one. But when you look at the trade signals, I'm sure when you actually look at the trade signals gives you precise target as well as stop losses. So that can be used to feed in here to see whether it actually works for you or not. Okay, now I'll give you one simple trade. What we did it. Let's say now we are buying Reliance at 980. Sorry, the trade risk is, I'm willing to take a trade risk of 1,000 rupees now, okay, and the strike ratio is, let's say, about, when it comes to my success ratio of this one, close to 58%, risk reward is actually 1.1, okay, it's 1 is good, which is minimum required, let's say 1.1 is what I'm aiming for it, okay, now my trading cost is 0.05, conservatively speaking, my stock price is, let's say, 980, and my stop loss is around 960, okay, not even 960, let's say 975. Now people say, Murugan, only 5 rupees risk, and they get excited about 5 rupees risk. Let me tell you one thing, it's not 5 rupees risk, whatever the stock risk is, okay, your quantity is going to make your risks always same. Now look at this, the quantity has become 200. By any chance, if I make it as 970 as my stop loss, my quantity has become 100. So in case if I take a wider stop losses, okay, 960, okay, my quantity has become further reduced to 50. So the quantity is getting adjusted automatically in such a way, my risk profile for every trade is common. Doesn't mean you have to be lavish about placing your stop loss. I'm telling you people that you don't have to worry about the trade stock specific risk. Leave it to the analysis. So now I'm telling you people that know what is right stop losses. Okay, now look at this one. When it comes to, again, go back to the same funda here. Okay, now look at this one. Your stop losses should be closer to 1,200 because that is where the low of the hammer placed, and that is where the support of the upward sloping trend line support is also there. So logically speaking, if a price goes anything below 1,200, that is where I think maybe my view is wrong. So I should not lose my grip anything below 1,200. So now I should find the right quantity that will not disturb me even if its stocks goes below 1,200. So I'm sure it is a long stretched video. We are talking a lot of things, and in fact it's an unplanned video. So just thought of expressing my views. So look at this one, 20 rupees of risk. You still manage to find 50 quantity. Okay. Now whatever the risk profile is, like let's say you are taking about 950. Okay, so accordingly your things are, so understand generally what sort of difference you see between, because intraday is different from positional is different from option strategies, a lot of things. So every trade you have a risk and returns. So do feed in these Excel, and I'm sure you will find whether your journey is right or wrong. So per month you can do only 20 trades. When it comes to intraday trading, you see per day people do what, 5 or 6 trades or 3 or 4 trades. Let's say this works out to be 100 trades. Okay, now, and let's say it is 980 that I managed to make close to 970. Closer to a 1% risk you are actually taking. So I go for 100 quantity. If you do this 100 trades in a month, it's quite possible 100 trades in a month. If you do it for 4 or 5 trades on average everyday basis, sometime trending days you may be even more. Let's say you are 55% right, you end up making about 16,900 rupees, which includes all your cost and everything, provided you are right by 58% and you maintain 1:1 success ratio. Let's see, Murugan, I cannot take 1,000 rupees risk, Murugan, I'm not emotionally fit. You can actually make it 100. But you end up getting only 1,690. Okay, Murugan, 1,690 is not enough for me to play around. Let me tell you one thing, if you are very sure that you are getting 1,690, 1,690, 1,690 every month, then probably you can increase over a period of time. It is not about how much money you make when it comes to stock trading. It is about how emotionally you are qualified to handle risk. So handling 100 rupees risk, maybe it's many people cup of tea. But if you know how to handle 10,000 rupees risk, then probably you take it as a, see, there is no big difference we are making it. So just changing the trade risk. But changing trade risk is easy through Excel, very difficult through emotion. So I hope those who are trading in the markets, who understand the value of consistency, are understanding this particular one. So if not, feel free to try out this Excel, and I'm sure you will find it useful. Thanks for watching this video all the way, and I hope you enjoyed this video and you found something which is useful out of this video. So I request you people still consider liking this video, do comment it and subscribe our channel. A lot of people take it as a formality, but let me tell you one thing, these things are actually motivates us. So if you find it really useful, then do like it. No, and I'm sure this is something which a lot of people miss. People are still running behind analysis, someone short call, I have to make money, today I have to make money. Stock trading is a long-term journey, and if you are gamble here and you end up losing money. So don't behave as if like a player in casino house, play as a house. Only then you tend to win money, make money. Thanks for watching this video also all the way again. Those who found this video a bit fast, do see this video once again. Those who find this video so repetitively, because sir, I used to get the comments, people really wanted me to spend once, twice, thrice, but I understand people miss out grip. So don't mistake us, we try to find a balance in between. Thanks you once again. It motivates if you actually make a comments. So any relevant things will be available in your comment section. Do subscribe it, sir. Thank you. Thanks for watching this video. Bye.